Market makes a sharp recovery from day's low with key indices trading near day's high. Autos and banks lead the charge while defense and FMCG stocks lag. Mid caps are relative underperformers. Maruti sees its best customer response in 35 years with 80,000 inquiries and near 30,000 deliveries on the first day of the festive season. Hyundai too records its highest daily billing in 5 years. What's also notable is the jump in the small car sales. India's chief economic advisor tells CNBC-TV18 his guess is that FY26 could see 7% growth and that India will meet its fiscal deficit target. The optimism on growth is echoed by the industry, with Shree Cement telling CNBC-TV18 that volumes can tick up by 1 to 2% in FY26. Rupee hits a fresh all-time low, down from Monday's close of 88.31 on continued foreign fund sales and weak sentiment after the US visa fee hike. The RBI was offering dollars but is not actively supporting any levels, say dealers. The United States should be India's best friend, says JP Morgan's Jamie Dimon, adds the H-1B fee hike caught everyone off guard and bats for merit-based immigration. That's an exclusive. Hello and welcome to Business Lunch live from the CNBC-TV18 Motilal Oswal studio. I'm Bamakshi Thoria and it's the day of the weekly expiry as far as the Nifty is concerned, and so far it's not turning out to be a terrible Tuesday because we've seen a good recovery from the day's lowest point. In fact, just momentarily the Nifty had managed to slip into the green. It's a near 100-point recovery from the lows for the Nifty, and what's actually supporting it higher is actually some of these banking names. Take a look at HDFC Bank. We've seen some recovery coming in there as well. There's some recovery creeping in Kotak Mahindra Bank as well. There you go. HDFC Bank was trading around 956 levels. It's now above that 960 mark. Kotak Mahindra Bank also, we're seeing a good recovery. So the banks are actually supporting the recovery that we're seeing in the Nifty at least. But as far as the broader markets are concerned, they're not doing as well because the mid-cap index was underperforming what the Nifty was doing. The Nifty is flat. The mid-cap index is trading lower with a cut of almost 0.2%. The small-cap index, though, also is trading with a similar cut. And despite this sort of move, we're seeing some good jump on GMDC. Remember when we ended the earlier show, the stock was around 10% higher. The stock has built on to those gains. Now closing the 12% mark is GMDC. But the big story today clearly is of the auto packs and the record numbers that companies have witnessed on day one of GST slab change and Navratri season. Now, Sudarshan, how's the festive season started for all of these auto companies?
It's a great start for all the companies, especially all the passenger vehicle companies, starting with Maruti, Hyundai to Tata Motors. All the companies have seen a very good start. So we'll start with Maruti. It's saying that the inquiries that company has received on the first day of Navratri, it's the highest that company has seen in the last say 35 years. And the biggest positive is companies saying that the kind of inquiries and the kind of billings are being made, there is a possibility that it might run out of inventories, some of these segments. So on the first day of Navratri, company has recorded 80,000 inquiries and made delivery of more than 25,000 cars. And it's saying that very shortly it might deliver more than 30,000 cars. So since September of 18, the day company had announced pass on of GST cut and the additional discounts, on an everyday basis, company has been seeing inquiries of more than 75,000 and doing billings of more than 15,000. That is 50% higher than that the company sees on a regular day. And the positive part is entry-level segment, where billings are almost 50% higher than the company sees on the regular days. Talking about the Hyundai, company saying that on the first day of Navratri, company has made billings of more than 11,000, and that is highest that company has seen in a single day in last 5 years. Even Tata Motors is saying that it has made deliveries of more than 10,000 cars, and the inquiries have crossed 25,000 on the first day of Navratri. So we'll have to say what other companies say, especially about two-wheeler companies. Hero Moto, which has a huge presence in the rural segment, and also from TVS Motor and Bajaj Auto, they also have a huge presence in the entry-level segment.
So for now, it's no speed bumps for all of these automakers, Sudarshan, and of course the Josh is very high, like you said earlier this morning. Well, moving on then, India's Chief Economic Advisor, V. Ananta Nageshwaran, has said he expects GDP growth to be near 7% this year after the GST cuts. Now, speaking to Shireen Bhan on the sidelines of the Network 18 Reforms Reloaded Summit, he said he expects revenue growth to remain on track and is confident of achieving the 4.4% fiscal deficit target. Listen in.
Fiscal second quarter growth numbers are looking quite promising based on the high frequency indicators we track. But of course, that is still only about 1.5 to 2 months of data. So we have to wait and see how much, how did September fare, etc. But we're sort of quietly hopeful that the second quarter has maintained the momentum that we saw in the first quarter.
And so closer to the 7% mark is what you're hoping for,
but
on the back of what the information you have.
I'm hoping for rather than saying I'm predicting it. I'm not predicting it.
Fair point.
I'm simply saying, based on the trends I have seen, it's the number that I hope for. Yeah. We are confident that the final number will be 4.4% of GDP, which is the gross fiscal deficit. We have had good non-tax revenue growth, and overall revenue growth is on track in comparison to last year's numbers. And we feel that the festival season will last all the way until the end of the year because of successive, the Diwali festival spilling over towards Christmas and New Year, etc. So we are confident that the fiscal math will hold up very well for the current financial year.
Well, more from our Reforms Reloaded event then. Defence Secretary Rajesh Kumar Singh has told Network 18 that the government will soon invite proposals for medium-altitude, long-endurance drone contracts worth 30,000 crore rupees. Now, he said that the government is looking to double down on indigenization and will spend at least 75% of its defence capex within India.
If you're looking at it in value terms, I think you can expect in capex terms somewhere between 25 to 30 billion dollars minimum per year over the next decade, maybe a little more, I would say, rather than less. Our current plans are that at least 75% of our capex will be spent within the country. That's our normative target. Last year, we actually did 88% of our capex within the country. Last year, for the first time, we exhausted our budget. I think it is challenging to spend money in the Indian context, given the very elongated fail-safe type of procedures that we follow in terms of collegiate decision-making, approvals at the highest level, involving a lot of interministerial consultations. Last year we did it, and I'm sure this year also we'll do it. It really depends on how many contracts you end up signing. And last year we did a record number. This year we've already hit 3/4 of that, 150,000 crores worth of contracts we've already signed, or are in the process of signing if you include the LCA program. So we are confident we can do at least 2 lakh plus crores this year.
Well, meanwhile, India's External Affairs Minister S. Jaishankar met US Secretary of State Marco Rubio on the sidelines of the 80th United Nations General Assembly. Now, this comes days after US President Donald Trump unveiled a $100,000 fee for new H-1B visas. This also marks their first in-person meeting since the Trump administration imposed steep new tariffs on India, including a 50% levy tied to Russian oil imports. Now, the two leaders discussed trade, energy, pharmaceuticals, and critical minerals, with both sides stressing the need for a sustained engagement. And the big newsmaker then, the United States should be India's best friend, says one of the world's most powerful bankers, Jamie Dimon. The chairman and CEO of JP Morgan is in Mumbai for the bank's annual conference. Now, speaking to Prashant Nair, Dimon says he is optimistic of a resolution between India and the US, and he also said the recent hike in H-1B visa fees caught everyone off guard. Listen in.
And the president and your prime minister clearly like each other, so which I think is good. I don't know what derailed it. I do think the Ukraine, Russian oil has been part of it, so I would take the president at his word on that. I'm still optimistic. In fact, I think Scott Bessent or the president recently said, no, we're going to get something done with India, and I hope we do. I think it'd be very important.
How will this work out? Because I mean, I think the Indian side has been very clear. I'm not asking you exactly what happens, but there has to be an off-ramp, right?
Yeah.
To knock those 25% off and then maybe work down the remaining 25% as well.
You know, I'm not involved in negotiations. I don't know.
Yeah.
I do think they want to do something on the American side, and I think they want to do something on the Indian side.
Yeah.
And so I'm hoping that they resolve it intelligently. I think it'd be good for both parties.
Yeah.
And I think, you know, India is a great friend of America.
Yeah.
It should be. I know it's non-aligned, and it should stay non-aligned, but with their non-alignment, we should be their best friend.
All right, don't forget to watch excerpts of this exclusive conversation all day today on CNBC TV18. Taking a short break now, more news and updates on the other side, so don't go anywhere. Welcome back. Thanks for staying tuned into Business Lunch. Now, the rupee hit a fresh all-time low of 88.8 per dollar, down from Monday's close of, on 88.8. Now, on continued foreign fund sales and weak sentiment after the US visa fee hike. Dealers say the RBI is offering dollars, but is not actively supporting any level. Lata is here with more on this. Lata, over to you.
Yes, when I started to track the rupee, it was down 0.4% day on day. And now it's down about 0.6, almost 88.80 compared to about 88.31, which was the Monday close. Actually, the big fall came when that 88.45 broke. That was seen as a kind of a support level. Once that broke, we found everyone, importers, corporates, bankers, dealers, all of them rushing in because it looked like, now it's blue skies. We don't know where it'll fall. There was a Reserve Bank here and there, but they were not apparently protecting a level. What perhaps psyched the market was that on Monday, because of the FTSE, the FTSE rebalancing, the equity sales was not expected to be much, although there was the negative news of the H-1B visa. However, when the numbers came, it is 2,910 crore of sales. That also changed the market's thinking. It looks like the sale a sale of equities and therefore buying of dollars by foreign funds is continuing because of this negative sentiment of the H-1B over and above the tariffs. And that's taking the rupee to lower levels. It's becoming kind of self-fulfilling. As the chief economic advisor told CNBC TV18 earlier, the RBI and the government are perhaps okay with a bit of the rupee fall because that makes life easier for exporters who are already bearing the burden of higher tariffs and a global slowdown, an Asia slowdown, as it were. And then there are fears of lower remittances because of the H-1B visa, but that's for a later day, not immediately. However, the tolerance for a lower rupee is seen, and that was another reason why the rupee was plumbing lower depths. But I just want to leave you with one thought, that this is not only an India fall. Today is a bit of a pan-Asian fall. If you look at Philippine peso, or if you look at the Indonesian, rupiah, that's really been falling. Both of them have actually fallen a little more than the Indian rupee, which is, a 0.5% is a big one-day fall for the rupee. But a couple of other currencies have fallen even more. If you ask experts, they tell you that, all the bad news of the rupee is in the price, and we will probably see some recovery, some appreciation in the fourth quarter, that is in the Jan-March quarter. But at the moment, people are still looking for that support level for the rupee.
Absolutely. But let's slip into a very short break for now. We'll get you more news and updates on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC-TV18. Sajjan Jindal-led JSW Group is deepening its auto business foray with plans to launch cars and truck and plans to have JVs. Parikshit Luthra caught up with Ranjan Nayak, the Executive Vice President of Corporate Strategy at JSW Group, and began by asking about the investment slated for the next 5 years.
So in the phase 1, we are setting up a 60 JPS plant that is almost 500,000 cars per year in phase 1 in Sambhajinagar. So we have already acquired the land. The construction is going on in a full swing. We have all subs has been ordered. So we are expecting the first car to be rolled out in the second quarter of 2026. So once this phase 1 500,000 cars capacity is built, we'll start expanding to another 500,000. So that will be combined as a 1 million car. Simultaneously, we have signed an MOU with the government of Odisha. So wherein Bhubaneswar will be allocated around 900 acres of land. So that will come in phase 3. So in total, next 5 to 6 years, so we'll have a 2 million car capacity.
So could you also give us a sense of how much is going to be invested by JSW and how much are you going to pick up from banks by way of loans and how much by way of equity stake?
So almost in the ratio of 30 to 70 equity and debt. And that is what we'll continue to do, because the cash flow, if you look at the cash flow, will be smoothened by early 2027. So we are so we'll try to maintain 30 to 70.
And there's a major funding announcement this week itself, you mentioned?
Yeah, right.
And how much would
expected?
That be?
So that will be almost $1 billion.
Well, that's all the action we have on this edition of Business Lunch. Don't go anywhere. Midcap React takes all of the action forward.